The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday the 23rd of August, and at 10 o'clock, there will be Fed speak, and we'll see what happens. So everything that I'm talking about right now could be totally redundant, could be a big miss, but the Dow futures are up at this 8:06 a.m. Eastern Time moment, up 173. Very optimistic. Well, the chart is very optimistic. What happens after 10 o'clock is something else. We'll see what happens. But we're at 41,004. You can see by the design of this pattern here, you've got your cup formation, you've got your Chapman wave inside track repellent zone right there. You've got Chapman wave inside wedge dash target resistance line. The next resistance will be, if it's today, will be at 40, can I read that? Yeah, 41,258. Ooh, that's 200-something points above. And then Monday is slightly higher. What's the support? The support is the inside track repellent zone that has become a propellant zone. Then that takes you down to this whole area between 40,700, 40,800, 40,700. So we'll see exactly where we are. But so far, look, the futures, very nice action. Look at this. There's a 10-minute chart going above. Remember, there was that horizontal line at 36,024 that I've been talking about for quite some time. You go to it and you pull away. Now we're in that zone. We're at 56.26 in the S&P futures, up 32. That's very optimistic. There are many reasons why I think that the optimism is warranted, but that doesn't mean to say that the market will respond to whatever the Fed says. Now, here's a cup formation in the 5-minute chart. I don't want to go to that. I want to go to the bigger picture right now. So let's go back to our story. The story is the S&P, as I say, is at 100 up sharply. I'll go to the continuous contract right now. That is up 32 at 5,626.25. Now, this is fascinating to me. We're in I forgot to put the up arrow. We're in a buy mode, but it's only leg. Can you believe that from August the 5th to where we are this exact moment at 8:09 on a Friday morning, this is the 23rd of August, this is still a leg A? That means that from the low that was made at 51 right there, this is a continuous contract, on the 5th of August goes to 5120.00, round number low. And then there was a lower high the following session. So you really only started your gray leg A. The very next session, that was a session of the 7th of August. And then it goes floating letter A, following session A, and it's A all the way. It's a floating letter until it becomes a peak. And even today, I can't call that an A, a peak A. It's a leg A until the end of the day. Because if we go above yesterday's high of 5645.25, this is Technical Friday, so we get a little technical here. That means we've continued leg A. That means we couldn't get, in the futures that is, we couldn't get a peak D, which is what you get in a buy mode in what we're in. With the stochastic at 94%, MACD expanding, still expanding in the histogram, 9-period way over the 14 and the price way over the 9. That means you can't get, let's just imagine that today's an A. We don't go above yesterday's high. That means peak A today. Monday, there's a big move up. It takes it to a new recovery high. That'll be B. Tuesday, it's down, so it's a peak B. The next day, it's a leg C. That's Wednesday. Thursday is a peak C. Friday, there's a leg D. You can't get a peak D, which is the objective in the buy mode of the Chapman wave, before the following Monday. That's still August, but we're almost wrapping up the month. So that's fascinating, right? All right. So as we are looking at this, a little bit of a pullback, but it's just a minor pullback. Let's go to the NQ. Have I updated that? No, I don't think I have. Yeah, NQ, single leg A. Whoa, I forgot to go to this. So let me just go to the cash S&P. That's different because yesterday, remember, we had a pullback. We had a pullback from a leg B. So that is the leg B, almost at the 5669.67 all-time high of the 16th of July. We were just an eye blink away. Didn't get there. We'll see if we're able to get there by Monday or Tuesday. Look at the QQQ. That's what we were going to next in the futures. This is a leg B. It's not participating as it's participating well, but not anywhere as well as the S&P. Hey, talk about the S&P. Look at this. This is the S&P low volatility, all-time high, all-time. 69.82. I'm sorry. 69.82 was the April 2022 all-time high, plunges down to 55.99 in 55.99 in October of 2022. And what was the high yesterday? The high yesterday was 69 point, oh, look at that, 76. I would say 17 cents away from an all-time high. Unbelievable. Right, let's get back to our story. So now we want to go to the NQ, and that's in leg A, and it is up 157. The high yesterday, well, this is pre-market. You can't pre-market and market are two different things. The cash starts at 9:30. So this will start at, this has been going overnight. The high yesterday was 20,025.25. The high so far this morning, we haven't got there, 19,736. So that's really interesting, right? So we've got the QQQ. As I say, that turned around to leg B. Right. So let's go to the IWM. The IWM is the Russell 2000. Now, the IWM had already gone to a leg C, but that leg C in the 215s was way under the 228.63 all-time high reached back in beginning of August. So this is still August. There was that big plunge from 228 down to 196.50 area, 196.70. And then 196 point, I think I said 60, 50 or 60. That gave a nice turnaround. I should mention we're along the Dow, we're along the IWM. And this is not participating as well, but it's doing very well for the IWM because it's filled that gap, and that was important. Let's go to the RTY. This is the futures. RTY, the futures, just barely went to a leg C yesterday, pulling back a little bit today. It is up 11, but it was a red candle yesterday. So we'll see where this goes. But it's a leg C, and as I said before, the Russell small caps didn't do all that well. SMHs, big pullback yesterday in leg B, and it's now up 3 pre-market at 245.45. High yesterday was in the 250s, so this has got a lot of work to do to be able to get above that. We'll see what the Fed's going to do. I wanted to, just before we go to the break, I want to say gold. Gold is up 19.5 at 25.36. I've still just got this going to a leg C and then a leg B. It's at a leg D. It's at a peak B right now. I'll be back in a moment. Basil Chapman, early edition at 8:14 a.m. Eastern Time.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so to speculate on what the Fed Powell is going to do, let's just have a look at this. Gold is up right now, up almost $20. And from the pattern that I'm looking at with the 9-period moving average still very strong, to get that green 9-period moving average in the daily to go pink, you'd have to see gold at about 24.50. It's at 25.36. It's almost 100 points down. It can do that, and then I'd have to change the notation yet to an alternate count, G/B, and then it'll go to a G. But at this point, everything looks, the MACD is still very strong. Relative strength, this little gray line right here in the daily chart is pulled back. Weekly chart is still at 82% in the stochastic. That's good. On-balance volume was overbought. It's pulled back. The weekly chart still has a lot of work to do to improve in the stochastic, but the MACD crossed positive. It's not very strong, but it did cross positive. The 9 is over the 14, and the monthly chart, the stochastic's at 80%. The on-balance volume is a tad overbought, but strong. MACD is expanding, still expanding, and we've got another week to go, and then we'll see what happens. Another week to go. What do I want to talk about? Today is the 23rd. Yep, another week and a half, actually. And then we've got leg C. That should still go to a leg D in the monthly chart. So that's good. Look at silver. Silver, SI, are trading right now up a little bit, up 40 cents. It's got a little bit of work to do to start. It's holding the 9-period moving average, but it needs to climb over the high that was made in the continuous contract of 29.035. If we can do that, that's going to be very positive, because it'll start tackling all these areas right here when the 9-period moving average flipped to pink, negative, right there. So I would say that at any point in August, if silver, without closing under 28.50, if it's able to get into the, very close to 31, that's 29.40, it's about a point in 1.6 higher. That's going to be a lot. But if we can do that, that'll be very positive. Then it starts tackling this trend line in the weekly chart, and the monthly chart got a peak C, and there should still be a leg D in the continuous silver contract. Let's go to high-grade copper. High-grade copper right now should be up a little bit. Yes, it is. Up 0.02 at 4.17. That 200-period moving average has been strong resistance. It hasn't broken through. So if we can start trading at it's at 4.16 right now. If we can get to 420, I need it in the 20s, 422. That'll be really nice. Nice, not good, but nice action. The weekly chart has a lot of work to do. Let's go to bonds. The bonds are, at this particular point, almost unchanged, 30 seconds, 124 and 435 30 seconds. It's in the higher range. It's walking the 9-period moving average. 9's over the 14. That's good, so it's green. The MACD is just turned negative. The relative strength is making lower highs and lower lows, but it's still okay. It's not great. And the stochastics at 62%. That's weak. And the on-balance volume has pulled back from being a little overbought. But it's that weekly chart that has impressed me. I had, up until the week of the 23rd, that's starting next week, to test the 126 high that was made back on the week of the 29th of December of last year. That was peak A, and then it came all the way down to the 113s. If I use this plumb line, the low that was made the week of the 26th of April as a low, then the number of bars on the left from that high at 126 to the low that was made here at, what did I say it was, 112, let's call it 113, should equal the number of bars to the 23rd. Well, we made it before. Last week, no, 2 weeks ago, is that 3 weeks ago? Yeah, that's been covered, so I don't see it. 3 weeks ago, we already went above 126. We went to 126 and 27 30 seconds. So it's already achieved the inside wedge, Chapman wave inside wedge, target repellent line, and it certainly got repelled, but now it's trying to get back. If in August, and I'm saying August, so it has a time limit, this particular candle can continue moving to a leg D above the high that was made in the continuous contract of the 9th of August, and that's 126.27, 30 seconds. Not only does it help the weekly chart get that stochastic into the 80% area, it's at 78% right now, but the monthly chart continues a leg B that it's in, and that's what you want to see. You want to see it attempt at least to get into all these ugly red candles from June and July of 2023. And it hasn't done that for quite some time. And that will help the pink 9-period moving average at least start to improve enough to say, hey, maybe it can cross positive. It hasn't yet. And that would mean that the TBT, that's the inversion of the TLT, can start to pull back under 28.87. That was the low in the TBT that was on the 5th of August. That's when the market turned around. And 28.87 needs to be taken out. Now, it's going to be tough because you've got the 200-period moving average. This is the inversion. In other words, this is like yields, right? So when the TLT, which is the bond contract itself, moves higher, so the inversion is it's like a Bach counterpoint. As one melody is moving up, there's another melody moving down. And that was a great contrapuntal work from the Baroque period. Now what we're looking at is if you can see the TBT take out the low that was made at 28.87 the week of the 9th of August, that changes things because now it's the second time since it made a low back in December of 2023 at 29.22. Now you're pulling away from the rising 200-period exponential moving average. Not only that, you've got your dreaded H pattern right here in the monthly chart where it went to a B, and now it's taken out that left side low, so that becomes a B minus. So that means we haven't got, I can't put a down arrow yet because there's no pink 9-period moving average in the monthly chart, but that's an A. Call it a gray A because it was in moving counterpoint. Now it's a B minus because it took out the left side low. So this is the pattern that we talk about. Let me just show it's Technical Friday. So I may as well just show this. Oh, do we have an 8:30? Yeah, I think we might have an 8:30 report, maybe jobless numbers or something. Look, this pattern, when it comes straight down arches over, fails at a peak A or B, takes out the left side low. That can be a very negative sign. We had that right there. We had it right there, B minus. We had this A pulling back, and we'll see if that's going to take it out right there. That's a monthly chart. That's a big arch formation. So if it's already taking the left side low out, but you have to wait for the end of the month because it's a monthly candle to see if it closes underneath that. All right, let's do this quickly. I want to go to crude oil. CL has tried to rally a little bit yesterday. Oh, now it's following through. It's going to move up to $1.39 to $74.50. There's a dreaded H pattern. It saved the day by having a bit of a balance before taking out the left side low. It held the Chapman wave inside track. Propellant zone, remember we spoke about this yesterday. Really important to move sharply higher, just as a pattern. We'll see what happens with crude oil going into the end of August in that monthly chart, which looks like it's really trapped in a sideways move. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
There's no better time than now to sign up for Live Trading Fridays. Why is that? That's because the next trading session, this Friday, August 23rd, coincides with Jerome Powell's Jackson Hole speech. Chairman Powell's comments have the power to greatly move the market, and Larry is ready to capture those gains on the moves. Use code LarryAUG24 at checkout to save $50 off your first month. See you there, Tigers.
Hi folks, we're back. This is the early edition of the Tiger Technicians Hour. Basil Chapman here, and I guess we might get some 8:30 news. I'm not sure yet. Whatever it is, the Dow future, the S&P futures is up 28. The Dow futures up 150, 160. They're both up even sharper than that. They've pulled back a little bit. What happens very often when Fed speaking today, Fed Powell chairman is talking at 10 o'clock, I think, at Eastern time. So very often what happens is if the futures or if the actual price of the market, usually it's Wednesday at 2 o'clock, if the Dow is up sharply and the S&P or the market itself is up about 45 minutes before the 2 o'clock, this is the reading of the book, whatever the was it Brown Book? Yeah, whatever said, whatever the statement is, you will find that the market suddenly pulls back to almost unchanged, or if it's down sharply, you suddenly have a rally and get to almost unchanged. And then the Fed speak whatever the statement is comes out, and sometimes even before the 2:30 conference or reporters questioning of the chairman, the market could come right back again to wherever it was. So all I'm saying is, if I'm looking at, and I did get to the yields, so yields are doing their own thing. If you're looking at that TBT, which is, or you could even look at the TNX, which is the 10-year, which is where most of the credit card or most of the numbers that you're looking at for the percentages that are given for loans are derived from the 10-year, you can see that it's making lower lows and lower highs. And right now it's down 6 cents at 38.56, at 3.856. So I suspect that a lot of the work has been done. Look at the monthly chart. You've got that dreaded H, that pattern we were talking about. This is a line, this horizontal line is what I've said. We had been trading. We've been there many times before. This is just a little different because we've had many things happen in between. I don't know if I can show you I'll try to show you the chart. I don't know how far it goes back. Yeah, this goes back a long way. You can see we were there back in 2009, 2010. So these are numbers that we've been at before. In the interim period, we were dropped to 3.98. Let me see if that gets updated and gets smoothed out. So this is the low of March of 2020, 3.98. There it is. Yeah, 3.98. And we've been as high as just recently 50 says, so that's 5. I mean, that's a big deal. 49.97, 4.997. So you can see we've been here, and I suspect that the market is wanting to see some. It doesn't have to be a big deal. Just the trajectory should be lower highs and lower lows in the yields. That's really what you want. And the Fed it's a tough thing that they're looking at, because if you look at numbers, for instance, people are spending a little bit more than they had. But if you look at, and even if you look at the housing, look at this, the housing. This is Toll Brothers trading right now at 142.42, up $1.15 pre-market. Well, the all-time high, I hate to tell you this, but the all-time high was at peak B. It should still go to a C and a D at 146.75 on the July the 31st. So the Fed is kind of tough. My suspicion is it's going to, the quarter point, I think, I wouldn't be surprised if that's kind of the accepted range that but that he'll talk about optimistically, but he's going to say he's data dependent. And the weight of evidence is that the majority of the Fed board wants to go for the lower yields. It's an election year, so if he does anything, it has to be done now, because if he does anything afterwards, actually the press couldn't care less. He could do anything he wants. Any other time they would fuss, but he could do anything. So as far as I'm concerned, it's the data. I don't know the data that he gets, obviously, but I'm just looking at what I'm looking at, and that just says it's a mix. It's still a mixed picture, because if he brings rates sharply lower, wow, look at this, the HGX. This is the Philadelphia housing sector. This is leg E in the monthly chart, almost at all-time highs. I've got this as an F, but that could change if it goes to a higher high. I wouldn't be surprised if that weekly chart becomes a brand new leg B and not a G. Now, it's even more important is that this cup formation says very often you can get a move that goes just under, right on, or just above the previous high. That's at peak D in the daily chart for the Philadelphia housing sector index at 770.91 right now. The high that was made July the 31st was 808.44. I may as well just put that in. And we're at 770. That's a long way to go. So I wouldn't be surprised. We've got a little kind of jabbing and stabbing right around here. This is a dartfish day in the daily chart of the HGX. But it is working its way. It's above the halfway marker. So if it goes to 782 anytime in the next week, it's at 770 right now. 782. Yeah, 782. I think that that's going to be very beneficial to the housing market. So we'll be looking at a number of things. Now, a couple of questions that I had that I said I'd go to. Yes, let me just do this right now. So I use a number of stocks as kind of benchmarks for what I'm looking at. Here's Cintas, overalls, uniforms, rentals. I mean, that's really the economy, right? This is in a leg F in the monthly chart. This could, in fact, be an alternate count, but right now it's an F. All the technicals are good. The on-balance volume, the blue line is very overbought, but the stochastic flat at 92%, that's good. Weekly flat at 88%, that's good. Everything here is good. Is that an F or is it an alternate count? I'll call it an F for now in the weekly chart, and a brand new peak A, B, C, D. Okay, so there are. I had a question. What did I think of? Did I listen to the speech last night? Yes, I did. What did I think? I mean, as a production, this was a Hollywood production. Every few minutes, I don't know how they got those placards. Everything changed. Where did they store them? How did they deliver them? Just everything. It was amazing, right? You had a placard for every single thing, or some kind of something that people were holding. That was very impressive. So anyway, as we're looking at CTAS as the Cintas, if you look at WM, which is waste management, this is really part of the U.S. economy. It's pulled back from the 225 round number high of the 19th of July all the way to the 200 period, moving exactly. And then it ran to the upside. There's a huge gap there that needs to be filled. Disappointment. That's a little surprising. That tells me about the economy. The economy is, they're looking at real mixed market here. There are certain parts of the economy that are slowing down. Look at General Motors. General Motors had a big pullback from the 50.50 with the 50 open on the 21st of July. Slumps down to the 38s and it's now at 46. So yes, it's pulled back, but it's having a good rebound, very good rebound. Yeah, I think that it's not so easy for the Fed. It might look easy. So I think that it's going to be almost status quo with a bias towards the at least 25 rather than 50. All right, I'll be back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. So we're looking at 210.84 for Texas Instruments, high on the 17th of July. And we've got 210.88, slightly higher high yesterday. And question is, all right there. Question is, G-Man wants to know, Basil, will you take a look at TXN, please? Looking at doing a put credit spread. So I'm not going to do the put credit spread analysis, rather, because I just don't have all that information in front of me, but I have the chart in front of me. This is a leg C in the monthly chart and extended by just 2 pennies or 3 pennies in August to continue July's leg C. So this is still leg C. You cannot get a peak C in Texas Instruments until September. That's the whole month of September, meaning that whatever the high is in August, if there's a low by even 1 penny, all of September, the high is not taken out, it means that we are going to be looking at September as being a peak C, and then you should still get a leg D, higher high in 2024. So Texas Instruments, this is a sleeper. Now, this comes under the aegis of former dinosaurs becoming relevant, like IBM. Look, here's the IBM chart. For decades, you heard whatever the phase was. If it was information technology, oh, we are there. We're doing spending billions and billions. Nothing. If it was cloud, oh, we are spending billions. Nothing. Enterprise software, nothing. AI, nothing. Then all of a sudden, it was towards the fall of last year, IBM just picked up, and now it's become relevant. And now you've got the same thing with Texas. I've been watching Texas Instruments, but kind of ignoring it. Just every once in a while, I say, oh yeah, Texas Instruments, because we used to watch this back in the 1990s all the time. But now what's really important is that it's got this cup formation right there. It's broken out above the left side high that was back in 2021. I think it was somewhere like July or August in the 190s. And then it went to 200 in September. And what happened? Pulls back all the way down to the 140 level. And lo and behold, yeah, we are at 204. It's relevant. So I'm looking at this as a positive bias. So in that regard, that's looking out. But very short term, it made a peak D yesterday because it had a lower high. It made a double top potential. But look at the stochastic at 87% and flat. I don't see this breaking down. I see this moving higher. So I would be looking at this as limited downside, maybe at 203.77, no, 204.58 pre-market. I'm looking at the 201 to 198 level as being really good support, at least very short term. You could go a tad under it, but the way it's looking right now, everything looks very good. So I'm just going to say Texas Instruments, as far as I can see, I would have a target over the next I would say by mid-September to maybe the end of September, that there's a really good chance that 250, it's at 204. I think you can go 10 to 15 points higher. That's the way I'm looking at it. So you have to put that into your put credit spread and see how you can figure that one out. I do see if the Fed, let me just put it this way. Let's just say 10:30 this morning. We're at 8:46 a.m. So in less than 2 hours, if the market has a response, I don't care what happens in between, but at that particular point, if the Dow is up 80 or more points, preferably triple digit, that is a really good response, and it should hold all the way through to the close. If in fact there's either a pop and a drop or just a plain old drop, and the Dow is now down more than 180, and it holds under, it's greater than minus 100 going into 1 o'clock, that's a real problem. Of course, today, in another 12, 15 minutes, you've got Larry Pesavento doing his live trading webinar. It should be fantastic. I mean, if you want to sign up, there's still time. I would do that. So, and okay, so G-Man perfect, Basil, just what I was thinking. We'll develop a plan. Great. Okay. Now, the other thing that I'm looking at here is, so look at NVIDIA. So NVIDIA is in the high PE category, right? Advanced Micro Devices has taken over, I guess, another firm, and there's talk that it could become competition. Become competition and being competition, two separate things. So right now, NVIDIA, high PE, is trying to tackle the weekly inside track. This is a falling axe formation. Think of this as a handle. This is the blade of an axe, or just an expanding cone, declining cone formation. It's trying to break to the upside. I'll just give you numbers. 140.76 was the high on the 20th of June. It really tumbled to 90.69 on the 5th of August. This is a great retracement. Is this going to be for the semiconductors? I just did Texas Instruments. I'm doing NVIDIA. Advanced Micro Devices doesn't have, Advanced Micro Devices had a much deeper decline. It looks much, much weaker because it's making lower lows and lower highs. So I'm just saying, in terms of just the SMHs, because it's really important, where the SMHs go, invariably the market goes, and the SMHs have had a good rally, but they haven't gotten back even close to the 283.07 all-time high on the 11th of July. I think that's really important. So if this afternoon, the SMHs, I don't care about taking out yesterday's high, but I do care that the SMHs at pre-market is up 275 at 245.18. I don't want to see it lower than 242. If it takes out yesterday's low of 241.54 today, I'd say it's going to take a lot more work for the market to actually have a nice spring to the upside to make those higher highs, because I'm anticipating at least D's in the Dow. Look, the Dow is at leg B. Could be a peak B today if it doesn't take out yesterday's high. Then it's going to have to work. And it works much better here. Yeah, I haven't corrected this. The inside track repellent zone says it's impossible because it says by the 27th. Well, no, it's possible. By the 27th, you get to test the all-time high, the round number all-time high of 41,376. I actually have another analysis, and it took me, and is this the one right here? Yes, this is the one. This is the one that I show my subscribers every day. That takes me to the end of August, the beginning of September, the 2nd of September, with the inside track, the way I've drawn it here. This is the one I refer to. It's more reliable, I think, in the way I've analyzed it. The plumb line doesn't take it to the low of August the 5th. It goes a little bit to the peak right there. So I've got this as a move to the upside, going to higher highs. I don't know about taking out the all-time high in the Dow, but it should go towards 41,376 by the end of next week. I'll be back in a moment. This is the early edition. Basil Chapman. I'll wrap it up in the next segment. See you in a few minutes. This is now 8:50 a.m.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Hi, folks. This is this final segment before we wrap it up and we go to Tommy for the morning market kickoff. And, of course, don't forget that Larry's doing his webinar in a few moments' time. It should be very exciting to see what happens. Now, there's a lot of anticipation, so there's not much room for error here. But I don't see any reason why. I think he has to set in place, Powell has to set in place something now, so that when he does it later on, it doesn't look like a political move because he's already set everything in place. So I think that the 25%, I don't see any reason why he doesn't go ahead with that. But the rest says you've got to wait. We looked at the housing market. We looked at what is builders. Let me go to BLDR. This is, oops, I should have typed it in here. Builders, BLDR. Yeah, look, almost, this is all way off the all-time high in the 210 area. It's 174 was the last high, and now it's pulling back. So, okay, there are things going on that tells us that there is a weakening economy in many areas. All right, I wanted to do this right now. I wanted to say, so what am I looking for? I'm looking for, after the Powell speak, I go to the futures right now. The futures are, Dow futures up 187. If the Dow futures, just before it could pull back sharply, but I'm talking about 30 minutes afterwards. If the Dow futures are minus 100 or more, that just says, hey, you're going to have to wait. 300 points down is a serious pullback. But if it's just 100 and something, it says, oh, no, didn't quite meet our expectation. Next week, we should be making higher highs. And I'm looking at higher highs coming up. That's the way I'm looking at it. That's how we position. Now, if there is a move to the upside, it has to be sustained, but I suspect anything that is at least over 100 points higher in the Dow is going to be important. In the E-mini futures, I'm going to the continuous contract up 33. If they pull back, but at 10:30 they come back and they're up 22 or more, that is very good. If they are minus 22 or more, I'm just saying, you know what? Let's see what happens. If they are deeply down 60 or something else is going on. But in the meantime, our bias is for my subscribers to opening call and check it out. We've got long positions. They've done really well. We're adding to them, but now just for the moment we stop because we want to see what happens this coming day or two. So have a wonderful rest of the day. Great programming coming up, and I will see you on Monday. Check out my opening call.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.